What it did was it laid out some very basic fundamentals that actually represented what you might remember as the wall of risk, geopolitical risks, the Brexit risks, different tensions with the US and China, different factors that were playing out, but not necessarily manifesting themselves in anything really tangible from a risk perspective. But leading into the pandemic, it actually put an immense amount of pressure on portfolios. It put pressure on supply chain risk. It put pressure on people understanding what was going to be happening in terms of just the way the world's going to operate. And there was a huge flight to quality for gold. So while inflation had been a topic that we were talking to clients about for quite some time, going into 18 and 19 and getting traction with institutional investors understanding how gold could play a role in the right kind of diversification to a portfolio, everything got amplified and everything accelerated into the pandemic. And we saw record-setting flows into exchange-traded funds. We saw logistics issues cause decoupling of the gold price and futures products here in the US. You saw an incredible growth in ETFs, for example, in Europe, which had been growing but actually grew much faster at that point. And as we've moved away from pandemic market risk and uncertainty, which is a real driver of strategic valuation of gold, and started moving more to a tactical move where we started seeing central banks get involved with rates and the risk of inflation, potential recession, you started to see more tactical behavior take over and the opportunity cost to kick in. So what we're seeing now is a year, 2022, where gold hasn't performed all that well in isolation. Relative to other real assets and global assets, it's still ranking quite high in terms of its overall performance. But it's doing what it says it does, but it's doing it in a world where it has a lot of headwinds on the short term. Strength in dollar, rate movement, opportunity for people to look at the bond market, the treasury market, the dollar market, and find homes. So you're seeing gold do well, but well relative to other assets. And actually what we'll be looking for are some factors I think we'll talk about later that are going to turn the corner for gold and get it back on its trajectory of positive earnings.